Well, good morning and welcome. We're at the start of another fresh day of trade. We're looking at a GIFT Nifty absolutely flat, as you can see on your screens. But let's quickly take you through all that's happening in global markets. I'm Harsh Saita. With me is Ankita Saxena. And over the next 1 hour, we'll take you through global markets. We'll take you through all the events to watch out for today, as well as everything that you've missed on the corporate front, as well as on the domestic as well as international front with regard to business news. So we'll quickly take you through all of that, prep you up for the day ahead. Let's quickly take it to Ankita. Ankita, talk to us about how global markets are doing.
Good morning to you, Harsh, and good morning, everyone. So finally, Wall Street has snapped the losing streak that we were seeing for the last 3 days. But perhaps the dips have been bought into because the interest rate fears are still looming, and we are penciling in a quarter point increase again in July. But yesterday, all the major averages, like I mentioned, snapped the 3-day decline. Dow Jones Industrial Average gained 209 points, S&P 500 advanced 0.2%, and the Nasdaq Composite lagged. However, it rose just 0.18% in trade. Now, today we have the Consumer Price Index report that is set to release pre-market. And also we have the June Producer Price Index that is due tomorrow. So two very important data that is likely to come out in the US market, and that everyone will be watching out very closely. Investors have also penciled in another quarter point increase at the Federal Reserve's July 25th and 26th meeting that we will be tracking very closely. And let's move on to the European markets. European markets also closed slightly higher from the positive cues that came in from the US markets, and investors are also digesting a surprisingly low Chinese inflation reading that came in yesterday during market hours, and also they look ahead to key US data and corporate earnings that will be coming out later in this week. The Pan-European Stock 600 ended up 0.2%, FTSE was up 0.2%, DAX and CAC both up 0.4% in trade. So largely a positive handover coming in there, Harsh.
Absolutely, and let's quickly take a check on crude. Now, crude, which was around that $74 a barrel mark, that's where WTI largely was. Well, it shed around 1% or thereabouts in early trade yesterday, but later on it seems to have recovered a bit of those lost gains. Now, of course, in line with some of the global indices, the losses are largely due to a possible subdue or a possible impact on demand. So demand subdued will obviously impact crude. So that's one piece where crude prices fell lower. But also the other piece is that we have Saudi Arabia cutting crude production. So that will mean crude prices will find some level of support, and that's exactly what happened. We saw crude being supported by a possible or rather a cut in crude production. We did speak about that. 1st of July was the date on which 1 million barrels per day was going to be cut by OPEC Plus to support the crude market, and that's what's playing out. What we're also seeing in terms of where Brent is, largely the same move, but at $78 a barrel is where Brent is currently at. Just below $73.50 a barrel is where WTI is at. Quickly on to events to watch. Ankita.
Right, Harsh. So as of today, we will be seeing the UK jobless claims data that will be coming out. We also have the UK unemployment data that will be coming out, and we have the EIA short-term energy outlook that will be coming out as of today. And back in India, we have the AGMs that will be in focus are by Punjab and Sindh Bank and by Raymond. So these are the AGMs that will be in focus, and let's quickly take you through the earnings calendar. Earnings is upon us, and starting tomorrow we have TCS, we have HCL Tech, and on the 13th of July we have Wipro that will be reporting its quarter numbers. We also have Tatva Chintan that will be considering a proposal for fundraise as of today. We also go ex-dividend for Balakrishna and DRL, JSW Steel and Persistent. Also we have the lock-in period that is ending for anchor investors for Avalon Tech as of today. And in other events to watch out for, we have the GST Council meet on the 11th of July, which is today, on the online gaming discussions. So these are the events that we will be tracking very closely for you.
Absolutely, that key GST Council meet as well coming in today. But very quickly moving on, US stocks ended higher yesterday. We'll move straight to global news. While Fed officials backed the view that the economy is incredibly resilient and inflation rate is also high, Raphael Bostic reiterated, he's the governor of the Fed, he reiterated that the Fed is going to make sure that it curbs inflation and ensures that inflation returns to its 2% target. While the Federal Reserve of the Cleveland president, sorry, even Bostic is the president, the Cleveland president, Loretta Mester, projected the rate at or a little above the September median. San Francisco Federal Reserve President Mary Daly stated that they need to keep raising rates as the inflation print too is high. She also said that the central bank might need a couple of more rate hikes to curb inflation.
All right, moving on then. Instagram's Thread app has reached 100 million users within just 5 days. It has surpassed Chatgpt. That took 2 months to reach 100 million users, while popular video sharing platform TikTok achieved the same milestone in 9 months. In comparison, Instagram itself took 30 months to reach 100 million users after its launch in 2010.
Right, and moving on to geopolitical news, Russian President Vladimir Putin held talks with Wagner Group's chief earlier in June. The meet took place 5 days after the Wagner-led mutiny against the president was aborted. Putin also met with other military commanders, including the head of the National Guard. The Russian president is said to have had discussions with regard to the attempted mutiny with senior commanders.
And in a major geopolitical development, Turkey has allowed Sweden to join NATO. It comes a day before when the member countries are set to meet in Vilnius. It will set the stage for the allies to showcase their unity to a summit focused on supporting Ukraine's against China invasion.
Right, time for a very short break. We'll come back with more on the other side. We'll speak about more on the business news domestically as well as the impact segment. Right, welcome back. You're watching Market Cafe on ET Now. Let's quickly take you through what's happening in the Asian market basket. Of course, US ending or closing yesterday slightly higher. We're also seeing a slight bit of green on the US futures, largely flat though, and you can see that some of that positivity is pouring into the Asian markets as well. You're looking at the Shanghai, absolutely flat but slightly higher. Kospi definitely higher, 1% higher is where the Kospi currently is at, so definitely positive on that front. We're also looking at the Hang Seng up around 0.4% or thereabouts. The Nikkei, which is also higher, over 0.5% or thereabouts higher on the Nikkei as well. And we're seeing the SX 200 up a solid 1% as well. So across the basket, we're seeing green. We'll just quickly flash the Nikkei if we can and close that. So around 0.5% higher on the Nikkei as well. So across the Asian market basket, we're seeing positive green. So that's positive, but what we're seeing on the Gift Nifty is it's showing just absolutely flat, no returns, but a slight positive bias coming in. Not even a positive bias is what I would call it. Flat as a pancake early this morning for the Gift Nifty. Ankit.
Welcome back. You're watching Market Cafe, and before we begin with the rest of the news flow, let's quickly take you through what's lined up on the market. At 8:20 a.m., we have Rakesh Arora of GoIndiaStocks.com on the Foxconn and Vedanta deal. At 9:20 a.m., we have Vetri Subramaniam of UTI AMC on his account of the street. At 9:35, we have Gautam Shah of Goldilocks Premium Research on where the markets are headed from here on. And at 9:45, we have RP Goyal of NHPC on the hydropower boost.
Right, of course, the Foxconn Vedanta piece is going to be extremely interesting to understand what the impact of that is going to be. So stay tuned on TM for that one. But very quickly, we'll go to the GST Council and try and take a download on what to expect from that. They're going to meet up today, the GST Council, and several rates across sectors are going to be discussed. SUVs, MUVs to online gaming and casinos. Prakash is here with more details.
Yes, some important agenda are there for the GST Council for discussion and approval. Sources are informing the Council may come out with some clarification, which is with regard to ambiguity in tax liability on various products such as raw cotton and pan masala. We are given to understand that raw cotton sold to cooperatives may attract 5% GST under reverse charge mechanism. Sources are also informing that the Council may discuss comprehensive definition for sports utility vehicle and multi-utility vehicle to charge 22% cess up and above 28% GST. We are also given to understand that the Council may discuss GOM report on online gaming, casino and horse racing. When it comes to the proposal, which is with regard to providing GST exemption on millet-based products, sources are informing that this proposal is also on the agenda for the Council for its discussion. Fitment Committee of the GST Council has made this recommendation to the GST Council, and it is expected that the Council may discuss this proposal in its today's meeting. Apart from that, Council may also finalize rules for constitution of GST appellate tribunal. When it comes to providing exemption in 12% IGST, which is with regard to certain cancer drugs, this proposal is also on the agenda for the GST Council for its today's meeting. Some other important clarification may also come, which is with regard to GST rates on food and beverages sold in cinema halls. Sources are informing that the Council may clarify that GST rates on food and beverages being sold in cinema halls will only attract 5% GST rather than 18%.
And well, moving on to the news that has been seen as a big setback for India's chip manufacturing plans is that Foxconn has backtracked from its joint venture with Vedanta to make semiconductors in India. Now remember, Foxconn, the world's largest contract electronic maker, and Vedanta had signed a $19.5 billion pact last year to set up semiconductor and display production plants in Gujarat. Meanwhile, Vedanta has expressed confidence and reiterated it's committed to its semiconductors fab plans. Let's go across to my colleague Sumita, who has more details on the story. Over to you, Sumita.
Right, so Taiwan's Foxconn is pulling out of the JV with Vedanta. That deal was set up to produce semiconductors from India. In fact, if you remember, just last week, Vedanta Group had taken full ownership of the joint venture with Foxconn, set up last year to manufacture semiconductors. Now, will it mean a derailment of Vedanta's chip manufacturing plans? Well, Vedanta tells ET now, and I quote, Vedanta reiterates that it is fully committed to its semiconductor fab project, and we have lined up other partners to set up India's first foundry. We will continue to grow our semiconductor team, and we have the license for production-grade technology for 40 nm from a prominent integrated device manufacturer. What Vedanta also hints at is that the company will shortly acquire a license for production-grade 20 nm as well. It also says, and I quote, Vedanta has redoubled its efforts to fulfill the Prime Minister's vision for semiconductors, and India remains pivotal in repositioning global semiconductor supply chains. Remember, Foxconn and Vedanta signed a pact last year to invest $19.5 billion to set up semiconductor and display production plants in Gujarat, seeking to tap into the country's plans to become an electronics major, to make mobiles, tablets, EVs, and so much more, which was much in line with government's ambitions of making India a semiconductor hub. But the initial application submitted by Vedanta for the semiconductor unit was also not approved by the government, and hence the company even filed a revised proposal. If you remember, we reported some time back, Foxconn had shared a statement wherein it said Foxconn is working to remove the Foxconn name from what now is a fully owned entity of Vedanta. Foxconn has no connection to the entity, and efforts to keep its original name will cause confusion for future stakeholders. In fact, Foxconn, which is the world's largest contract electronics maker, says that it is confident about the direction of India's semiconductor development and will continue to support government's Make in India ambitions. In fact, the JV Vedanta Foxconn Semiconductors Private Limited was a wholly owned subsidiary of Vedanta Group entity Twin Star Technologies. The new structure minus Foxconn will make Vedanta India's first company in integrated semiconductor and display fab business.
Right, thanks for that, Sumita. But we'll stick to this story. You know, we also had Ajay Dua, who's the former Secretary, Ministry of Commerce and Industry, and Jayant Dasgupta, former Ambassador and Representative of India at the WTO, both on our channel last evening to talk exactly about this, try and understand the impact.
Industry, the government was giving as much as 50% of the investment by way of an capital grant. In addition, the government of Gujarat had committed to give 20% of the cost also as a guarantee. So that was going to make it 70% in all. So it was a lot of money being committed, so which the government had to be careful, public money. And when they found that the joint venture is not making any progress whatsoever, it rightly said, I think we need more time.
Problem, that, as I understand, is that they want more than 50% subsidies, and they are going to negotiate on that. As in Gujarat, for the Micron technology plant of $2.75 billion, Micron is investing only $825 million.
And well, moving to another important news on the Zee-Sony merger. No immediate relief for Zee Entertainment promoters. SET has refused interim stay on SEBI's order against Puneet Goenka and Subhash Chandra. SET also directs SEBI to appoint a whole-time member to consider the objections by Goenka and Chandra. Meanwhile, NCLT has reserved order on Zee-Sony merger. Let's go across to my colleague Ankur for more details on the same. Over to you, Ankur.
Yes, the decision on Zee-Sony merger is likely to be very soon, as NCLT has now reserved the order in the case after a series of arguments between the petitioner as well as the respondents, which happened, in which Puneet Goenka counsel has mentioned in the NCLT that 96% of the holding of the company is in the hands of public. Therefore, the shareholders will decide about the future of the merger and not the individuals. Remember, SEBI had passed an interim order against Puneet Goenka as well as Subhash Chandra, barring them from holding any key managerial position in any of the listed company, and even SAT has not provided any interim relief by putting a stay on the SEBI's order, but SAT has directed that Ashwini Bhatia, who has passed the interim order against the two promoters of the company, the Securities Appellate Tribunal has said that Ashwini Bhatia needs to be replaced, as he was also part of the decision-making committee which decided on the plea of Subhash Chandra as well as Puneet Goenka regarding the consent case in the matter, and therefore the whole-time member needs to be replaced. The respondents will file the appeal in SEBI within 1 week, and after 2 weeks SEBI will decide on the matter. So that direction has come from Securities Appellate Tribunal, but for NCLT it has been decided for now that the court has reserved the order.
Right, from Zee as well as Foxconn, Vedanta, we'll quickly move to flows. SIPs for the month of June are near record highs. SIP inflows have breached the 14,000 crore mark yet again, second consecutive month for that. And inflows into the small cap mutual funds also reached a record high. They went well past 5,000 crore rupees. My colleague Sharad joins in with more details on this one.
Well, yes, we'll be looking at June's AMFI data, and the SIP numbers are near the record levels, and this is coming in for the second straight month where the SIP monthly numbers are above the 14,000 crore mark. So the SIP numbers are near the record levels, and looking at the flows itself, there has been an outflow coming in. Of course, this is the adjustment coming in from the fixed income side because of treasury management, but overall the equity flows itself, that has come at 3-month high levels, and looking at the equity AUMs as well as the total AUM of the mutual fund industry, that is coming at the record high numbers. Now looking ahead, of course, in the details itself, their inflows has been there in the fixed segment, in the low duration and the money market schemes, but when it comes to the mid caps and the small caps, that is the place where the fund action has been there, and right from the 5th straight month inflows has been recorded. And looking at for the small cap fund itself, it's got its highest all-time high levels of monthly inflows of more than 5,700 crores as it was reported. Now, of course, for the second straight month, due to sector rotation, the large funds saw outflow coming in and also outflow coming in the focus TLS and the flexi cap equity segment as well. But overall, a very strong set of retail numbers coming in when it comes to the AMFI data.
Well, all right, then it's time for us to slip into a short break, but you don't go anywhere. After the break, we get all the stock-specific action.
Right, welcome back. We'll quickly move to the stocks that are in news, but before that, let me quickly flag the GIFT Nifty as well. Absolutely flat is what the current indication is on the open, but let's quickly look at the stocks to watch out for. Out of that, let's quickly specifically look at PCBL. They announced the commissioning of the first phase of its specialty chemicals capacity expansion at Mundra, Gujarat. New plant has a capacity of around 20,000 metric tons per annum, and upon completion, PCBL will have a specialty chemicals production capacity of 40,000 MTPA at its Mundra plant. We also have the likes of a Veranda Learning, the board meeting to be held on the 14th of July to consider fundraising. Gujarat Pipavav Q1 update coming in. Right, and we also have Ashesha joining in. Quickly, Ashesha, talk to us about all the stocks that are in news.
Well, yes, apart from PCBL that you spoke about, we will also have Veranda Learning in focus, and that is because Board of Directors are scheduled to meet on the 14th of July to consider their fundraising plans. Gujarat Pipavav, the next one in focus on the back of their operational updates, where container cargo volumes stood at about 1,99,000 TEUs, which is an uptick of about 6% on a year-on-year basis. Nazara Tech, meanwhile, two news flows over here. One, of course, today GST meet is scheduled to happen, which will reconsider GST rates on online gaming. Apart from that, Board of Directors have also approved fundraising to the tune of 750 crores. So on account of both of these news flows, Nazara Technologies will also be in focus. Moving on to Petronet LNG, then this counter is in focus on the back of some management commentary that has come in, where the management says that they see stable LPG prices this year. Current spot LPG prices are similar to long-term prices of about 11 to 12 MMBTU, operating the Dahej LNG terminal at about 95% capacity, and the company also said that they are seeing pickup in local consumption of gas. So strong commentary has come in from the management, and on account of that, Petronet LNG will also be in focus. Moving on to Avalon Tech, then it was a recent IPO, and now anchor lock-in will end, which means those investors will be able to sell these shares in the open market, and that ends today. Lastly, Ugro Capital, on the back of strong operational data that has come in for the first quarter, where AUM rose to about 6,800 crores, which is an uptick of a whopping 86% on a year-on-year basis. And as far as gross loans are concerned, gross loans stood at about 2,036 crores, an uptick of 50% on a year-on-year basis. So strong operational updates, and that is the reason Ugro Capital will also be in focus today.
All right, then Ashesha, we will be tracking all these stocks very closely and watch out for these stocks to be buzzing in trade. But Ashesha, I'll ask you to stay back because Nifty Metals is in focus as it has underperformed the benchmark in the first half of this calendar year. However, the performance is really reversing. You know, we saw that in the month of July. Will the metals continue to shine? You are the research analyst. Take us through the details.
Yes, metal stocks are in action yet again, and after significantly underperforming the broader market benchmark index in the first half of the year, looks like the trend is reversing. So in first half of calendar year 23, Nifty Metal Index was down nearly 8% versus Nifty 50, which was up nearly 6%. But now in July so far, Nifty Metal Index has seen an uptick of about 3%, outperforming the broader market index. Now, several macroeconomic challenges, global slowdown, fears of recession were the primary reasons why Nifty Metal Index underperformed in the first half of the year, but looks like the trend is reversing. Possible policy action from China and sector rotation is the primary reason action has been now of late seen in most of these metal stocks. Now, analysts do believe, as far as steel stocks in particular are concerned, analysts believe that steel prices now seem to be bottoming out, and perhaps export prices also could see some comfort at these elevated levels where they stand currently. So yes, action is back yet again in metal stocks and looks like the trend is reversing. Question now is whether the momentum in these metal stocks will continue.
Thanks so much for that, Ashesha. We'll quickly go to UPL, Rallis, PI Industries, Sumitomo Chemicals, all of which will be in focus as FMC, the fifth largest agrochemical company globally, has cut its guidance for Q2 calendar year 2023. Let's quickly go to Somit, who's got more details on this one. Somit, good morning.
Well, the bigger news coming in here is that FMC, which is the fifth largest agrochemical company globally, has cut its revenue and EBITDA guidance on the lower side, not only for the second quarter of calendar year 2023, but also for the full calendar year 2023. Now, for the second quarter, they have lowered their revenue and EBITDA guidance by around 30 to 48%, while for the entire calendar year, they have lowered their revenue and EBITDA guidance by nearly 14 to 12%. Also, the company has not commented on free cash flow and EPS guidance for the entire calendar year, and they're saying that after the second quarter of calendar year performance, they would go ahead and comment on how they are expected to perform when it comes to EPS and free cash flow. Now, this cut in revenue guidance suggests that there's a considerable challenges in terms of pricing and volumes when it comes to the generic active ingredients, and they are saying that due to high inventory buildup, they are seeing nearly 30 to 70% drop when it comes to the prices of these chemicals. Now, this situation obviously does not bode well for generic agrochemical manufacturing companies such as Rallis India, Sumitomo Chemicals, UPL and PI Industries. Now, FMC's guidance cut suggests that the numbers for UPL could be weak even beyond the June ended quarter. Now, earlier the street had expected that the first quarter of FY24 would be a weak quarter for UPL. But this guidance coming in from FMC also indicates that going forward also the numbers could be weak for this company. Now, when it comes to PI, the impact is expected to be on the lower side because the commentary indicates that one of the key products of PI, which contribute nearly 5% of the CSM revenues, now the revenue or the sales of this product could be on the weaker side. However, the impact for PI Industries would be lower for this. On the positive side, FMC also said that they are anticipating lower raw material costs in the second half of calendar year. But do remember, the companies like UPL, Rallis and Sumitomo are actually the manufacturers of these key raw materials. So this clearly indicates that there could be further pressure on the earnings of these companies even beyond the first quarter of FY24, that is the June ended quarter going ahead.
All right, thank you so much for that, Somit. We'll move on then. JP Morgan has come out with a note on the Indian IT with an underweight stance on stocks like L&T Tech, Tata Elxsi, Persistent Systems and KPIT Tech. My colleague Vinny is joining in with more details. Take it away, Vinny.
Good morning, and talking about this mid-cap IT space, JP Morgan, firstly what they're saying is they believe that the engineering research and development spends that are seeing a slowdown in the last 6 months, but that is structural and not something that is cyclical coming in for the company. Also, they are highlighting that the channel checks are suggesting that they do not require these spends and the companies do not require an urgency in terms of amongst the enterprises to spend in these areas. That's the engineering research and development. Also, in terms of the reopening that's post-COVID, they require less in terms of the spends on connected and smart products as well. Furthermore, they're highlighting they believe that this puts the high teens revenue growth assumption for the next decade priced into the current stock valuation, which is at risk. So that is a factor that they're highlighting, and they continue to see a de-rating that could be coming in and potential in these mid-cap IT names. So some of the names that they've highlighted in terms of they're reiterating their underweight rating is on L&T Tech, Tata Elxsi, Persistent System and KPIT Tech. So surely keeping an eye out on these IT companies.
So much for that, Vinny. That was JP Morgan, of course, but let's quickly look at the other brokerage notes also pouring in this morning. We have Vamakshi here who's going through some of those. Vamakshi, good morning. Talk to us about the ones that are important.
Well, yes, a very good morning to you. Let's first look at Keval Kiran Clothing. This counter is in focus after a brokerage note that has come in from Antique, and they have highlighted that brand extensions as well as category expansion is reinforcing its core positioning. Accelerated store expansion is expected to drive growth in turn, and in fact, the balance sheet for this counter looks quite healthy as well. And on the back of all these positive factors, Antique is expecting to see a re-rating as far as the stock valuation is concerned. And given all these positive factors, Antique has initiated coverage on this counter with a buy rating, given a target price of 805 per share, and on the back of this brokerage note, watch out for this counter. Other than that, keep an eye out on Bharti Airtel. We have a note coming in from CLSA, and they have highlighted that India's cloud market of nearly $6 billion US is expected to triple over the next 5 years. In fact, Airtel has been boosting capabilities in cloud services with growing partnerships in order to take advantage of this opportunity that they're seeing. Cloud and data center creditors will in turn boost Airtel business growth and in fact add upside potential to this stock. So on the back of that, CLSA has maintained a buy rating on Bharti Airtel with the target price of 1030 per share. And lastly, watch out for Concor. We have a note coming in from Macquarie and they have highlighted that in the first quarter the volumes were a tad bit weaker than expectations. Concor has managed to regain some of its lost market share, but nevertheless the growth is still lagging Adani Rail. So on the back of that, Macquarie has maintained a neutral rating on Concor given a target price of 620 per share.
All right, thank you so much for that, Vamakshi. Now we'll move on. With markets hitting all-time highs, ace investor like Radhakrishnan Damani, Daly Khanna and others went on a shopping spree in the first quarter. While others made changes to their holdings, Sharad takes us through all the smart portfolios. Let's take a look.
Well, yes, looking at the smart portfolios over here, we have Rekha Rakesh Jhunjhunwala, where we have actually increased the stake when it comes for Tata Communication, and looking at Raghav Productivity also, there has been a strong increase of almost, you could say actually a decrease by almost 11 basis points. In case of Radhakishan Damani, we actually see United Breweries over here, they have increased the stake by almost 2 basis points. While for Daly Khanna also there has been 3 important increases coming, but largely these are the small cap names such as Nitin Spinners, Talbros Automotive as well as Bangalore Chemicals. Now looking at for ace investor Ashish Kacholia over here, he has actually decreased his position when it comes to Shelley Engineering Plastics, and also if you look at United Drilling Tools, that itself is expected that there is a likely exit has happened, but his stake has gone below the 1% as per the shareholding. Lastly, I'd like to point out Vijay Kedia's holdings, and over here there has been some smart movement coming in, especially when it comes to Patel Engineering, where he has actually hiked his stake by almost 39 basis points. But if you look at Elcon Engineering and Talbros, there has been a downward tick coming in.
Thanks so much for that, Sharad. Extremely interesting. Some of those names, especially the cuts that have happened. But very quickly moving on, Larsen & Toubro has said that it has signed a teaming agreement with Spanish-based Navantia for submission of a techno-commercial bid for the Indian Navy's prestigious P-75 submarine program. Here is an excerpt from the event.
So this is, as you correctly and rightly pointed out, probably one of the most important programs for the Government of India, our defense, our Navy, and of course for Larsen & Toubro. We have been involved in this defense program over the years. Certain strategic assets are made by us. But having said that, most important thing in all this is how to do a Make in India, and to the extent possible, Atmanirbhar and all these very complex programs. Though we have done quite a bit on our own, it is important that when you enter into a program like this, we try to maximize the Indian content of it. We found the right partner in Navantia, who is known to us for a very long time. We could enter into an agreement which ensures total transfer of technology, including the critical technology of Atmanirbhar.
This is such a major project. If you could give us a little detail about the project, how many submarines, we are hearing 6 under P-75, where you're going to make them, what percentage of indigenization there will be. I imagine it will be gradual, it will be less initially and more towards the end. What the total costs will be. These are the 4 big moments.
Some of these, I don't think I can explicitly say that, but as you correctly said, these are 6 submarines. Our factories and heavy engineering workshops in Hazira are already are capable of making it, and we are making some of these strategic vessels there. So this will be continued to be fabricated in what is called as the AM Naik Heavy Engineering Complex at Hazira. We have factories which are ready for it, which have the height and width and the gantry cranes capable for handling such huge diameters of vessels.
All right, then India's largest car maker, Maruti Suzuki, is gearing up to meet the festival season demand. Maruti Suzuki is seeing easing of chip shortage and hopes to deliver more cars to customers this festive season. ET Now's Sumit Chaturvedi caught up with the company's Senior Executive Officer Shashank Srivastava. Let's take a sneak peek into this conversation.
Less than 10 lakh category is now about 58% of the market, whereas the more than 20 lakh this quarter was about 7-8%, last year about 5%. Volumes are small, but it's grown, as you can see. And Maruti Suzuki, we are very well known in the less than 10 category in your introductory talk, but and we have about 60% share in that category. But what is not known so much is that in the 10 lakh to the 20 lakh category also we are the market leaders. So it's not as if we are only in small cars, but we have been very successful, in fact market leaders in the 10 lakh to 20 lakh category as well, with our Brezza, the Vitara, the Ertiga and the XL6 and the Jimny, of course, and the top end of Frogs. So it's not as if Maruti Suzuki is new, it's actually proved itself by being number one in the rupees 10 to 20 lakh category as well. So natural step would be to get to the next level, although the market is small. The other objective, which also is served by coming into this segment, is that it has an overall good brand premiumization effect on the other brands within our umbrella brand. So that's another marketing objective that we have, and hence we entered into this segment.
What things make it so special? Because most of the features are in other class of its of car, and already what are the features you have loaded in Victor with, and your confidence about that you will be able to attract the upper premium segment of the market?
Yeah, so this category of a 3-row premium vehicle, which can be an SUV or a MPV, is roughly last year was about 258,000 vehicles. This year expected to be around 300,000, and the premium category itself is about 110,000-115,000 or so. So it is getting bigger, and there are a lot of people who are wanting to have the premium UV vehicle, which has more like a SUV type of outside expression, but the real comfort of an MPV. That's something which is unique to this vehicle. There are about 7 other products in this category, so we are competing with them.
And as we understand now, the booking has crossed 7,000. What kind of booking overall, bookings you have received, and how confident that you will be able to, in fact, cross 10,000 soon about it?
Yeah, so when we announced the booking opening on the 19th of last month, and we had the price announcement on the 5th of July when we launched the vehicle. In that period, we got about 6,200 bookings. But in the last 2 days, since we have actually announced the prices and have shown the vehicle to the consumers, the booking has jumped up significantly, and it's now crossed 7,500. So the rate at which we are getting the booking now is much faster than what was in the pre-launch period.
All right, then it's time to wrap up this edition of Market Cafe. Harsh and I will take your leave. Thank you so much for tuning in. Don't go anywhere. The market is going to take the action forward.